Hello students, this is your Mr. GST who actually makes GST a good and simple tax for you. In this video, quickly we are going to revise the amendments which are applicable for your May 2025 exams. Providing free replacement. For that should be reverse any ITC like that if you get it out. For customer when you are providing free replacement, even though the name is free replacement, whatever the cost is involved there, for that the amount you have already recovered when you have made a sale. So now when you are providing something to the customer as free replacement, no reversal of ITC required. But now the point is, sir, while doing free replacement, we are using some goods. What about that, sir? See, now understand, in this free replacement, actually manufacturer has the responsibility to do free replacement. But distributor is the person who is one point contact to the customer. So the distributor or dealer, whatever it is, sir, he is using his goods and providing free replacement. For him, manufacturer will pay money. Okay. Now, how do we treat under GST in this now? One option is the distributor or the dealer will raise invoice to the manufacturer. Sir, I have used so and so spare parts here, and for that this is the GST amount. Like that, he will raise a tax invoice as if he supplied the free replacement goods to manufacturer. He will charge GST and he will pay to the department. Manufacturer also will take ITC of it, just like normal sale happened from distributor to manufacturer. This is one possibility. Or distributor is using his own goods. I told no, this own goods also he purchased from the manufacturer only. So he is asking manufacturer, sir, already I am supposed to pay some money to you. No, you raised invoice when you sold these spare parts to me. Manufacturer actually sold these spare parts earlier to distributor. So now what distributor is doing? He is using one particular spare part on behalf of manufacturer only. No, he is discharging responsibility of the manufacturer only. No, so he is asking manufacturer, I will not pay for this spare part to you. Suppose 100 silencers manufacturer has sold to the distributor. Distributor is saying, sir, one silencer I am using here for free replacement. I will pay you only for 99 silencers. Now what manufacturer will do? For one silencer, he will issue credit note. So he will reduce his GST liability. Who manufacturer? His output tax liability will come down. Same way, distributor would have taken ITC on 100 silencers when he has purchased 100 silencers. Now for one silencer, proportionate ITC he will reverse. So the manufacturer will raise a credit note on distributor, and distributor will reverse proportionate ITC. This is another scenario when distributor is using his own goods. Okay. Now, sir, it is not like distributor is using his own goods, sir. Manufacturer is sending his goods and then distributor is using. In such cases, manufacturer is sending the goods and distributor is using them, then obviously no GST, nothing. Or distributor is using his own stock, whatever is there, and later on when the manufacturer is sending his goods, that he is replacing in his stock. Simple. Simple. Manufacturer is sending the goods, distributor is using. Or manufacturer is saying, Ray, you use your goods, I will send the goods for tomorrow or day after tomorrow, like that. So manufacturer will send the goods and that will be used by the distributor. In such case, no GST at all, no supply, no ITC reversal, nothing. That concept will not come. Okay, this is with respect to free replacement. Now, sir, when we have seen here free replacement of goods, we have seen, and also distributor is providing service to the customer, free service, replacing this spare part, all this. Here he is also providing service. So it is free service to customer, but distributor will raise an invoice on the manufacturer. Sir, I have also provided some service of replacing the good, all that. So dismantling or installing all that stuff and all we have did. So we need some consideration for the labor charges, the service charges. That he will raise invoice on the manufacturer will pay GST and he will take ITC. Simple. That is the continuation of this replacement. Now, sir, one more important thing is, sir, in this itself we have one more thing regarding extended warranty. Let us see that. With respect to extended warranty, please understand, when you are buying a mobile phone, so when you are buying a mobile phone, they are saying that if you pay 2000 rupees or 2500, generally when you buy mobile, for display 1 year warranty they are giving, and they are saying if you pay 2500 extra, you will get 2 years extended warranty. So at the time of purchase of the mobile itself, anything, any product, I am giving example mobile phone, at the time of purchase itself, if you are taking that extended warranty, sir, who is giving the extended warranty? Supplier only giving extended warranty, sir. I am buying mobile in Sangeeta Mobiles and the Sangeeta Mobiles itself is giving me extended warranty. Na? Then, sir, they are selling mobile also, they are selling extended warranty also, they are selling back case, everything also. So it is like part and parcel of composite supply. Predominant supply is selling mobile phone, so that itself will be the tax treatment. No, sir, extended warranty alone separately sold by, let us assume, some Bajaj Finance fellow or somebody. Sir, in such cases, some third person is selling the extended warranty. Then it is a separate supply. You will be taxing it as supply of service and will be charged to tax accordingly. Okay. This extended warranty when you are taking at the time of buying the product itself. No, sir. After the product is purchased, Later on, we are taking extended warranty. In that case, no matter whether the seller is only giving you extended warranty or some other third person is giving you extended warranty, so it is altogether a separate supply and it will be taxed as supply of service only. Okay, that is what the concept of extended warranty. The next one is, please understand, GST on preferential location charges. Preferential location charges. See, for example, when you are buying an apartment, sir, during the construction itself, you are asking, sir, I want the apartment in 10th floor, east facing. Like this, sir, you are asking some preferential location charges. You are paying something extra for a preferential location. What is the tax treatment for that? Sir, nothing but whatever when you are buying that apartment or anything, sir, whatever the tax treatment is there, the same tax treatment is applicable even for preferential location charges. That is what the concept. Next one regarding employee stock option plan. See, understand here, I will explain this with a flowchart here. See, generally what happens is, generally, sir, the domestic company in India, which is a subsidiary company whose holding company is abroad. The domestic company in India is offering its company's employees the shares of the holding company, that is the foreign company. Okay, so they are offering it as a ESOP or whatever it is. Okay, employee stock option plan. For that, shares are directly allocated by the holding company, that is the foreign company, to the employees of subsidiary company. Now, for this, sir, what is the tax treatment? Now, please understand. See, first of all, offering the stock, the securities to employees, this is not at all a supply because it is transaction securities. But for this, subsidiary company is paying the consideration, correct? If they are paying exactly the cost, whatever they are reimbursing, the cost for the securities of foreign company, that is the holding company, then as I told, it is transaction securities, it is not at all a supply. But if they are paying anything additionally, the subsidiary company in India is paying something additionally to the foreign company other than the cost, then it will be treated as supply of service and GST shall be payable as if the subsidiary company in India has imported some service and GST shall be payable under reverse charge mechanism. That is what the concept. Very, very simple amendment. New entry in RCM services, that is, sir, renting of commercial property. We have seen renting of residential property 5AA. This is 5AB. Renting of commercial property by unregistered person to a registered person, then only RCM. But if you see renting of residential property, any person renting it to residential property for business purpose to registered person, then only RCM. 5AA is different. 5AA, supplier can be any person, recipient should be registered. Residential property for business purpose. But entry 5AB, renting of commercial property for, of course, commercial purpose only. Supplier should be definitely unregistered, recipient should be definitely registered. So supplier unregistered, recipient registered, then only RCM. Please be very careful here. Next one, place of supply, section 10 subsection 1 clause CA, sir, where the supply is made to an unregistered person, place of supply shall be whatever the address recorded in the invoice, that will be the place of supply. But the problem here is, now when the supply is made through e-commerce operator, in such cases, if the billing address and shipping address are different, then what shall be taken as place of supply? Sir, whatever the address mentioned in delivery, that is the shipping address, delivery address will be taken as place of supply, not billing address. Please be careful. For unregistered person, when the sale is made through e-commerce operator, the delivery address will be the place of supply, but not the billing address. So now the next one, if you see, sir, the new exemption entries in CGST Act. See, first of all, one segment we will see new entries regarding Indian Railways. Sir, Indian Railways are providing services by way of sale of platform tickets, facility of providing this retiring rooms or waiting rooms. You will be seeing now where you keep the luggages, clock rooms, all that stuff, and waiting halls, all that. For that, you will be paying some consideration, and some battery operated car services you will be seeing in railway stations. Okay, the platforms. So these services, for that they will charge some nominal consideration, that is exempt under GST. Okay, this is one new entry. Another entry is, sir, there are various zones and divisions in Indian Railways. Okay, like for example, South Central Railway, Southern Railway, East Coast Railway, all that stuff. So like that, one zone to another zone or one division to another division, providing any services, that is also exempt under GST. Okay, this is next one. Next, 9G, special purpose vehicles. Here if you see, sir, there are some special purpose vehicles which are formed and they are constructing the railway stations, and after a particular period of time they will hand over it to Indian Railways. But during that period, who is owning this particular railway station? Any railway station constructed by special purpose vehicles, they are owning that railway station for a particular period of time, and during that period they are allowing Indian Railways to use that railway station. And for allowing them to use railway station, Indian Railways will be paying consideration to special purpose vehicle. How they are paying consideration? Now they are paying consideration in non-monetary form, that is maintenance of railway station is taken care by Indian Railways. That means special purpose vehicle will construct a railway station and allowing Indian Railways to use that railway station. For that, consideration is paid by Indian Railways in the form of maintenance of that railway station, that is exempt under GST. Next one regarding this renting of the premises. See, understand, renting the residential premises, obviously we know exempt under GST. But sir, just like hostels, all these things, guest house, etc., whatever you call PGs for the students, etc., where the consideration, please understand, there are two conditions here. One is the consideration should be less than or equal to 20,000 per month, and there should be a continuous stay for a period of at least 90 days. That means greater than or 90 days, greater than or equal to 90 days if you are staying in those hostels where you are paying consideration, the rent for the hostel or PG is less than or equal to 20,000 per month, then that is exempt under GST. Clear? I repeat, two conditions. Number one, consideration should be less than or equal to 20,000 and the stay should be greater than or equal to 90 days. At least 90 days you should be there. The next one, electricity transmission and distribution utilities. So here they are providing various services like metering the equipment. Metering equipments will be given on rent, or testing your meters, transformers, capacitors, all that, releasing the electricity connection, or labor charges for shifting your meters, etc., or service lines. Or the fifth one, there is fifth point there, issuing the duplicate bills, all that. For this, if they are charging any nominal consideration, that will be exempt under GST. Next one, see, any person providing research and development services for consideration received in the form of grants from any government entity or research association, university or a college, which is notified under section 35 subsection 1 clause 2 or 3 of the Income Tax Act 1961, then it is exempt. So you are providing research and development services because you have received grants from either this government entity or the notified universities or colleges, etc., as we have discussed here. See, the next one is regarding, see, the central state educational boards are providing affiliation to various schools. See, understand, there is an exemption, and regarding that there are clarifications. First of all, what is the new exemption now? The central or state educational boards providing affiliation to the government schools are exempt under GST. And there was a clarification regarding, sir, is it exempt only for government schools? Yes, it is exempt only for government schools. So for any other private schools, all that, that means schools owned by central government, state government, union territory, local authority, governmental authority, or government entity, then only it is exempt the affiliation services provided by central board or state educational boards. If it is provided by universities to its colleges, then it is taxable. If central and state educational boards are providing it to private schools, then also it is taxable. This is regarding the clarifications there. And there is one more clarification regarding the services provided by flying training organizations. Sir, they are providing various flying training courses where the certificate is recognized as per DGCA norms, all that stuff. So whether this is treated as educational services and whether it is exempt under GST, yes, of course it is exempt under GST. Services provided by flying training organizations in way of providing various flying training courses which are recognized actually as per Aircraft Act 1934. So it is a recognized qualification under law. So obviously education services exempt under GST. That is what with respect to this particular segment. Next, if you see, there are some amendments in existing entities, just the changes in names, all the stuff. Apart from that, nothing majorly like structural changes. See, understand, National Skill Development Corporation, NSDC, or National Council for Vocational Education and Training. These people are the awarding body recognized by NCVET, or assessment agencies recognized by the NCVET, or training bodies which are accredited by this, accredited with the any awarding body that is recognized by NCVET. NCVET, remember that. Okay, National Council for Vocational Education and Training. Sir, they are providing any service in relation to obviously national skill development programs or any other programs implemented by NSDC, or any other vocational skill development courses, of course, by this National Skill Certification and Monetary Reward Scheme, or National Skill Qualification Framework, all the stuff which are recognized by NCVET, all the stuff. So these are exempt under GST. Earlier there was Sector Skill Council, now they are renaming it, all the stuff, and you are seeing the different names. That's all. Apart from that, exemption is same. Next one, earlier same services like training providers providing training services under Deen Dayal Upadhyaya Gramin Kaushalya Yojana, under that scheme. Earlier there was only the word skill or vocational education, now they have added training also. Sorry, earlier there was skill or vocational and training courses, now they have added the word education. Apart from that, this is nothing but the same entry. So these are the changes in existing entries, just here and there some small names have been changed. Next, there is a clarification regarding the statutory collections made by RERA. See, understand, statutory collections made by RERA, the department has clarified RERA is also a governmental authority. Whatever the services they are providing by way of collecting the statutory dues, all this stuff, that is also exempt under GST. Next one is regarding, see, the clarification regarding the loan granted by related person or overseas affiliates to its Indian entity. Now, simple, see, understand, whenever some banks or financial institution NBFCs are giving any loans to anybody, sir, they will charge processing fees. Why? Because to see his like repayment capacity, they will do various documentation, etc., and they will do background verification, all that, correct? For that, they will charge processing fees from the borrower. Okay, this is obvious, and that is taxable under GST. You know, loan processing fees is taxable, only interest is exempt. but credit card interest is taxable. But here, sir, when related person or my overseas affiliate which is there abroad is providing loan to Indian entity, why will they charge loan processing fees? Because we know sir, it is our own entity, correct, located in India. Sir, why will we verify about them, the background verification, all that? We will not charge processing fees. Now here you cannot say, sir, in this case importation of service is there, what service taking the loan, for that these people are not charging processing fees. So this is importation of service without consideration. Schedule 1 para 2 and 4 will come into picture. This is called as supply. Like that you cannot say, because sir, in this case this is my own related person or my own affiliate abroad is giving me the loan. So in that case, they won't do any background verification. Processing fees concept itself will not come. So the department has clarified it cannot be treated as supply. You cannot say this is importation of service without consideration. These people did not pay processing fees, but they should pay GST on this. Like that, you cannot argue. It is not subjected to GST. Okay, there is the another clarification. Another clarification, just remember, reinsurance term includes retrocession. That's all. So if you see the word retrocession, yes, this is included in reinsurance and it is exempt under GST. We have seen reinsurance services for notified services like general insurance services. Some services we have seen no in exemption. So entry 35 and 36 will talk about that. There the reinsurance word has been used, and reinsurance service includes retrocession. So if you see anything like that, it is exempt under GST. Just remember that. So the next one, if you see there is something called Central Public Works Department, who has the responsibility of maintaining the public parks in the government residential areas or near government offices and public areas, all that stuff. For them, any private person providing services by maintaining these public parks, etc., etc., maybe it is a purely 100% service or 75% service and 25% of goods like composite supply. So that is exempt under GST. Okay, so private person providing this like maintenance of by way of horticulture or horticulture works regarding that to CPWD, that is the Central Public Works Department. For them, whatever the services provided, purely service or 75%, 25%, 75 service and 25 goods, that is also exempt under GST. That is one thing there. And the next one is, sir, there is something called District Mineral Foundation Trust, which undertake the complete responsibility of the people who are residing in the areas which are affected through because of mining operations, all that. So people residing in those areas, for those people regarding the health or education or welfare of women and children, supply of medical equipment, all these things are provided by these particular entities. And please understand, these DMFTs are established by state governments and they are very much governmental authorities. Whatever the exemptions are available to government authorities, so they are also equally applicable for this DMFT. That is the another clarification. You understand? The next one is, if you remember, the services provided in relation to GTA, all the stuff are exempt under GST. So the loading, unloading, packing, unpacking, transshipment or storage, temporary warehousing of these goods, the services provided like this by GTA is also nothing but part and parcel of transportation of goods by road. So this is also like what will form part of services provided by GTA, and they are taxed accordingly. This is one thing. Sir, no matter what is the method of invoicing done by GTA, so these and all will form part of GTA services. Suppose if these are not provided as part and parcel of GTA services, not provided as part of transportation of goods, they are separately provided and invoiced accordingly, then they will be taxed accordingly. Next one is regarding time of supply for allowing spectrum usage or allowing the telecom companies for using the spectrum by the government. What is the taxability or time of supply? You know, these are services provided by government, hence taxed under RCM. Now, sir, the spectrum usage charges for that, telecom companies are paying the entire consideration upfront in that case, or telecom companies are paying that spectrum usage charges in installment. Both the cases, please understand what is the time of supply. The time of supply is when that payment is due or made, whichever is earlier. And this provision, this clarification is equally applicable for all the natural resources allowed by the government to be used by any other person. Okay, so this is equally applicable for allocation of all other natural resources by the government to others. Okay, so what is the time of supply? Payment made or due, whichever is earlier, both for upfront payment as well as installments. Next one, if you see, sir, there are various builders who are we calling as concessionaries who are constructing the highways. Sir, I am providing services to National Highway Authority of India under design, build, operate and transfer model, DBOT model, which we are calling as hybrid annuity model. Sir, where they are providing services of constructing the roads and then operating them and then they are transferring them. In these cases, sir, this is going over a period of time like 15 to 17 years. In this case, sir, NHAI is making payment to these people. What is the time of supply for that? For that, the department has clarified this is similar to continuous supply of services. So you should see whether invoice is raised within the time limit or not, and follow time of supply accordingly. If invoice is raised within section 13 subsection 2 time limit, then invoice or payment, whichever is earlier, or if the invoice is not raised within section 31 time limit, then the date of completion of service or date of payment, whichever is earlier, as the case may be. So this is simple, nothing but treat it as continuous supply of service, and time of supply shall be calculated accordingly as per section 13 subsection 2 of CGST Act 2017. Now the next one is, if you see, sir, what is the tax treatment in case insurance companies are settling the claim where there is some salvage or wreck balance left with them. Now see, for example, sir, there is a car which is met with an accident and its salvage value, now if you sell it as a scrap, it will recover 1 lakh rupees. So there is a salvage value, okay, and the insured has declared the value as 8 lakhs. So now the insurance value is 8 lakhs. Now the car is damaged. Imagine insurance company is only paying, hey, the car will give you 1 lakh, however, you go and sell the car and you recover 1 lakh, I don't care, I will pay you only 7 lakhs. So like that, insurance company has paid 7 lakhs. Now, insurance company doesn't have any connection or responsibility with respect to that salvage value or wreck value of that particular car. So, insurance company doesn't have any responsibility to pay tax on that salvage. Now, sir, suppose if insurance company is fully paying 8 lakhs, what insurance company will do? Insurance company will take full that balance, whatever the damaged car is there, accident car is there, that insurance company will take fully and will pay 8 lakhs and get lost, like that it is saying to the customer. Now, insurance company is having the property in that car, in that salvage or wreck. So now insurance company will pay, sell this car in future. No, when they are selling this car in future, on that insurance company is liable to pay GST. Simple. So simple, insurance company is deducting the salvage value and paying it to the customer. Now, then the salvage will become the property of the customer. The customer will take care of the GST, all that stuff if applicable. But insurance company is paying full the insured amount. That means the salvage or wreck will become the property of the insurance company, and the insurance company has to discharge the tax liability on that salvage or wreck, nothing but scrap run, whenever the insurance company sells this particular salvage or wreck. That is what the next clarification. So the next amendment is with respect to 16 subsection 6, the new section in input tax credit. If you see, sir, the section is all about 16 subsection 6 is all about, see, when your registration is being cancelled and you are applying for revocation, during the time what is happening, sir, when you are cancelling when your registration is being cancelled, you have time limit to avail ITC under 16 subsection 4, but at the time of revocation, still whether the time limit is available, still you are able to take ITC. Yes, sir, I am able to take ITC. Then happily you can take ITC as per 16 subsection 4, 30th November of the succeeding financial year or actual date of filing annual return, whichever is earlier of the relevant financial year. No, sir, at the time of cancellation of my registration, I had this 16 subsection 4 time limit still active, but at the time of revocation, 16 subsection 4 time limit is over, sir. Then what should I do? 16 subsection 6 is giving a time limit to you. Even though your time limit under 16 subsection 4 for availing ITC is over, at the time of revocation of the cancellation of registration, within 30 days you file all the pending returns and you happily enjoy ITC whatever has been expired, but the time limit is now as per 16 subsection 6. Now the next one is with respect to ITC availability on demo vehicles purchased by dealers of cars. Now please understand, first of all, if the dealers of cars are purchasing the demo vehicles, purchasing the vehicles and using it as demo vehicles, sir, first of all, he is into the business of buying and selling the cars. So obviously he can take ITC. ITC is not blocked under section 17 subsection 5. But sir, there is another possibility that where the dealers of the cars are not actually acting as like buying and selling on their own capacity, they are just acting as the agent of the manufacturer. In that case, they are not buying and selling cars. So if they purchase any car and use it for demo vehicle, use it for marketing activities, use it for transportation of their staff, etc., etc., here they are not into purchase of buying and selling cars, hence the ITC is blocked on the demo vehicles for them. So simple, dealer is buying and selling the cars, demo vehicles, he can take ITC. Dealer is not buying and selling cars, he is just acting as an agent of manufacturer, then he cannot take ITC. The next one is with respect to clarification regarding, sir, if it is an RCM purchase what I have made, on that what is the time limit to avail ITC under section 16 subsection 4? You know 16 subsection 4 time limit talks about, yes, purchases covered under RCM also. But what is the relevant financial year? The relevant financial year is nothing but, see here, when the recipient is liable to raise the invoice, obviously the year in which the recipient who should have raised the invoice, that itself will be considered as relevant financial year. So section 31, the time limit to raise invoice will be applicable, and the recipient should have raised invoice accordingly as per section 31 provisions and should have paid GST and should have taken ITC. Okay, so 16 subsection 4 will come into picture. Suppose if the recipient is not raising the invoice within the time limit, obviously, sir, there is delay in raising the invoice, delay in payment of tax, then the interest penalty under section 122 will come into picture. Whether ITC is available on ducts and manholes used in construction of these optical fiber cable networks? The answer is yes. Ducts and manholes are very much treated as plant and machinery, and hence if you are purchasing them for construction of optical fiber cable network, you can avail ITC on them. Now the next amendment is with respect to the insurance companies. Normally, you know, when there is any accident, etc., for the repairs, all the stuff, the insurance companies will make settlements, correct? For this, sir, the insurance companies will bear the cost of repairs. In this, sir, there are two types of settlements. One is cashless settlement, the other is reimbursement. Cashless settlements, then the vehicle will be taken to the garage which is within the network or within the arrangement with the insurance company. That garage will do the repairs and maintenance or whatever servicing and raise the invoice to insurance company, and insurance company will make payment, or customer will get the repair done in the any other garage which is not within the network of the insurance company and will submit the bill to the insurance company will reimburse the amount. Now, sir, first of all, cashless settlement or reimbursement, whatever it is. So, in both the cases, insurance companies are bearing the repairs cost for the vehicles and they will be paying the consideration, and hence they are eligible for ITC. If you see 17 subsection 5 blocked credits, there is an exception for general insurance companies. So, cashless settlements or reimbursement, sir, both the cases, insurance companies can happily take ITC on the repair expenses, whatever they have incurred. Here, the another interesting part is, sir, if they are going for reimbursement, imagine the insurance company is approving only 8 lakhs, but the repair cost is 10 lakhs. Now, when you are getting the repair done somewhere outside and giving the bill to the insurance company 10 lakh, insurance company will pay you only 8 lakhs. So, whatever the approved amount they are paying you, reimbursing you, only on that amount they can take ITC. No matter whether this 8 lakh, 2 lakh has been given invoices separately, approved amount on insurance company and balance amount to the customer, or entire invoice is on the insurance company name and insurance company is paying to the customer only the approved amount and balance it is not paying. In any case, remember, sir, if it is reimbursing, whatever it is reimbursing the approved amount, on that only insurance company can take ITC, no matter how they have raised invoice. But if the invoice itself fully raised in the customer name but not in the insurance company name, then how the insurance company will take ITC? So, insurance company cannot take ITC if the garages, the repair and maintenance expenses for that invoice is fully raised in the name of the customer. Even though the insurance company is reimbursing, it cannot take ITC because invoice is not in its name. So, that is what another clarification with respect to insurance companies incurring this repair expenses. The next one is respect to registration for metal scrap dealers. Please understand, metal scrap dealers can start their business and they can do business without registration up to the threshold limit, section 22 or section 24 is coming into picture. So, till section 22 or 24 is triggered, they can make the turnover without any registration, and because they are unregistered, making the sales as an unregistered person, opposite party is liable to pay GST under RCM. RCM will come into picture because sale of metal scrap by an unregistered person. If the opposite fellow is a registered fellow, RCM will come into picture. Once if the metal scrap dealer is crossing the threshold limit as per section 22 or he is becoming liable for registration under section 24, then automatically they should take registration and proceed, and of course then FCM will come into picture. So, that is what that means. Because you are making an RCM supplies, it doesn't mean that you are not liable for registration. Yes, you do business, go with RCM, but once 22 or 24 is coming into picture, take registration, now you will come into FCM. Now, there are new conditions or new cases, situations have been added for suo motu cancellation of registration by proper officer. Sir, they are nothing but when you apply for revocation of cancellation, whatever the pending returns are there, those pending returns you should be filing within 30 days from the date of revocation. If you are not doing that, then still again your registration is liable for cancellation. That means I have revoked your cancellation of registration, trusting that you will file all the pending returns within 30 days. If you are not doing that, again yes, I can cancel your registration. That is what the point. So, the next amendment is with respect to, see, we know normally when we are paying interest under section 50, sir, if at all there is delay in filing of return and because of that there is delay in payment of tax, we will pay interest only on the net liability, not on the gross liability. That means, for example, gross liability is 1 lakh and ITC I have 40,000, there is delay in filing return and because of that I have paid tax late. So, only on 60,000 you are supposed to pay interest. But now there is one more extra point, that is, suppose during that period, sir, from the due date of filing the return till the date of filing return, if you have some amount in e-cash ledger also, then that amount also you can exclude and only on the balance amount you have to pay interest. Suppose from the due date till the date of filing the return, sir, I have balance in e-cash ledger 25,000, ITC 40,000, cash ledger balance 25,000, so total 65,000 already there. So, balance only on 35,000 I have to pay interest. That is what the next amendment. Next one is with respect to TDS. See, you know, metal scrap dealers, registered fellows, one registered person and the other registered person, if they are dealing with metal scrap, TDS will come into picture with 2%. But understand, normally two persons for whom section 51 is applicable, between them if anything is happening, TDS is not applicable. But here for metal scrap dealers, even though for both of them section 51 is applicable, and yes, they have to follow TDS provisions. Okay, but others for whom TDS provisions are applicable, between them if anything is happening, they need not deduct TDS. But metal scrap dealers are an exception to that. The next amendment, very small amendment, TCS rate has been changed to 0.5%. Now it is 0.25% and 0.25%. CGST and SGST. Okay, earlier it was 1%. Now it is made to 0.5%. Now coming to the next one, the new one, GSTR 1A, where GSTR 1A is regarding either to add the invoices or amend the invoices which are given in GSTR 1. So this you can do. Suppose if any invoices are like missed out in GSTR 1, or if any invoices are wrongly reported in GSTR 1, you can use GSTR 1A and file that. Or even whatever, including the details given in IFF also, you can amend by filing GSTR 1A. Okay, so what are the features? See, this is first of all optional, and this is only once for a return period. For any return period, only you can file once GSTR 1A. Sir, I have did mistakes in GSTR 1A, again I want to file one more 1A, na? It is not possible. Next, this is only to amend the details of GSTR 1, details of GSTR 1 of the current tax period only, not of the previous tax periods. Next, any changes made in GSTR 1A, the liability for you will be automatically coming in the same month 3B, so you can happily pay the correct tax liability. But the only drawback is, sir, for the customer, for the recipient, it will come only in the next month GSTR 2B, not in the same month 2B. And GSTR 1A you can file only after the due date of the GSTR 1 or filing GSTR 1, whichever is later. Actual date of filing GSTR 1 or due date of filing GSTR 1, whichever is later. From that only it will be open. Till the date of filing 3B, you can file this GSTR 1. And sir, whatever the return details you have given in first month, second month IFF, that details also, when you have filed your GSTR 1 quarterly, any mistakes are there, you can file GSTR 1A and you can proceed. And changing the recipient's GSTIN is only available in GSTR 1. It cannot be done through GSTR 1A. Okay. Next, how do you report invoices in GSTR 1A? Now, whether it is GSTR 1A or GSTR 1, the reporting of invoices B2B, B2B and B2C large, B2C others, you know that. B2B normally, yes, invoice wise you have to report. B2C large, when we say B2C large, sir, it is interstate supply, value of supply. Earlier it was 2,50,000. Now, if the value of supply is greater than greater than 1 lakh, it should be reported invoice wise. If it is less than or equal to 1 lakh, you have to report it consolidated, rate wise, state wise. So I repeat, there is a small amendment in the B2C large invoices. Earlier it was value of supply greater than 2,50,000, you should report invoice wise. Now it is value of supply greater than 1 lakh only sufficient, you can report it, you have to report it invoice wise. Remaining things, yes, GSTR 1 or 1A, whatever it is, this is the reporting pattern. B2B invoice wise, B2C large also invoice wise, B2C others consolidated. So when you are giving consolidated figures, state wise, rate wise, you have to give the consolidated figure. That is what the point. Next, the GSTR 4 due date. Actually, GSTR 4 due date, earlier it was 30th April of the succeeding financial year. Now they have changed it to 30th June of the succeeding financial year. So students, hope you have enjoyed watching this quick revision video on amendments. Please understand, I always tell you, please make sure you are enjoying your preparation, not taking it as a stress or a burden. So wishing you all the very best from my end. Hoping to see you all successful in your upcoming exams. This is your Mr. GST signing off. Jai Hind.